underwriting results or the investment income. And these are the two traditional or two main sources for the insurance company. And that is why, by my assessment, they are the most important activities of an insurance company. They could well also be the two main avenues for losses for the company. So when underwriting goes bad, huge losses result, and losses lead to financial losses, and they wipe the reserves and the retentions that the company has. And again, when investment also go bad, the same thing happens. They result in huge losses, and they wipe off the results, and they make the insurance company very vulnerable, if not insolvent. It is therefore important, or the risk management framework therefore requires that insurance companies clearly indicate their risk appetite and risk limits to guide both underwriting and investment, as these could be quite critical to their survival. Ladies and gentlemen, the new Insurance Act 1061 the New Insurance Act 2021, Act 1061, will help to improve the regulatory capacity of the NIC, introduce additional compulsory insurances, and promote public confidence in the insurance sector aimed at growing the insurance market. It also provides the needed legal basis for the deployment of technology and innovation to facilitate the growth of the industry. Improve public confidence through the enhancement of claims is therefore it's another objective that the NIC seeks to achieve. One of the threats to the development of the insurance market is poor public confidence emanating mainly from poor claims culture, which could result from inadequate reserves and therefore poor liquidity. The NIC is working on improving on the regulatory requirement for treating customers fairly, which fundamentally is the reason for insurance. Coming to the end of my short address, ladies and gentlemen, the National Insurance Commission will continue to provide a regulatory guidance and interventions in order to ensure that recapitalization exercise will help generate the needed resilience for the Ghanaian insurance market. I should thank you all for your attention, and I wish you a very fruitful webinar. Thank you very much. I am done.
Thank you very much, Mr. Michael Ando. We are really grateful for that address. It was a very inspiring address because there were a few key points that I took from there, which was the regular actuarial valuation reporting and coupling that with technology and innovation. And personally, I believe that with where we are getting to in the world, you cannot do with technology. We have seen much progress in the insurance industry. It's grown quite appreciably, and it's great that we are getting to a point where we are going to adopt technology to enhance that industry a bit more. My name is Selom Selaoka from the Asset Management Desk of Blackstar, and I'll be moderating today's session with my colleague Louisa Nelson with the research wing. So we are happy to have you today, and we hope that today's session will be quite eventful. We'll learn a lot, and we'll discuss a lot on the call today. We have three speakers for today's session, and the first one is no person other than the president of the Ghana Insurers Association and also the managing director of Daniel Insurance. This is Mr. Seth Kobla Aklasi, and he will be giving us a presentation on enhancing insurance penetration in Ghana and promoting the well-being of the insurance public for economic development. Mr. Seth Kobla Aklasi is a driven and insightful chartered insurer with an MSc Ethical Underwriting, Claims Administration, Reinsurance, high-level marketing and specialist energy underwriting. So we can see that Mr. Aklasi is a big man, and we are really honored to have him on the call today. He'll be giving us a 20-minute presentation, after which we'll be able to share our thoughts, to discuss, give suggestions, ask questions, and hopefully we'll be able to have a fruitful engagement. So Mr. Aklasi, if you're ready, kindly unmute yourself, and then let's get the ball rolling.
Good morning. My name is Kingsley Kwesi Poverson, and I'm presenting on behalf of the President of the Ghana Insurance Association. I'm the Chief Executive Officer of the Ghana Insurance Association, so I'll be presenting on his behalf. He sends his apologies. He was caught in an emergency that he had to deal with. So that I'm doing the presentation.
Welcome, Kingsley. So yes, please go ahead. We are ready when you are.
Thank you very much. I hope you can hear me.
Perfectly.
Okay. Distinguished ladies and gentlemen, the special guest for today, that's the Deputy Commissioner of Insurance. I'm very happy to be here to give a short presentation as part of the Black Star Brokerage program. Not just me alone, but the Ghana Insurance Association is happy to be part of the second edition of the annual Investor Webinar Series organized by Black Star Brokerage, a program aimed at providing financial education across the financial services spectrum. This forum is important because it serves as a platform for us to share ideas on various perspectives towards improving the financial fortunes and education of fellow citizens of our great country. My topic is enhancing insurance penetration in Ghana and
Hello, Dr. Poverson.
Yes.
Yes. So would appreciate it if you could, share your video with us so that we can have a more personal interaction with you.
Okay.
Is that okay?
Please, can you see me?
Yes, that's great.
You can
Please
see
go
it.
ahead. Yeah.
Okay, is it okay or you cannot?
Yes, this is fine. We can see you.
Okay. Thank you very much. My topic is enhancing insurance penetration in Ghana and promoting the well-being of the insurance public for economic development. And three key issues can be discerned, namely insurance penetration, insurance public's well-being, and economic development. I must say that the three form a triad with their fortunes intertwined. On one hand, the ever-trumpeted objective of increasing insurance penetration cannot be achieved without promoting the well-being of the insurance public. This is at the core of our search for a magic wand that will propel the insurer to contribute much more effectively to the gross domestic product of the country than we are currently doing. Insurers have the task of developing the right products at the right price for the over 80% workforce in the informal sector in Ghana, using a need-based approach that does not only analyze this segment, but importantly, continuously innovate to meet changing tastes, preferences, and challenges. The death of a parent must not end a child's dream of continuing his education and developing his God-given potential, nor should a market fire end a trader's ambition of soaring to higher heights in their chosen vocation. While admitting that insurers do have the responsibility of improving people's well-being, insurers have indeed amply demonstrated that they empathize with the people. For example, the average daily claims and benefits paid are in excess of 4.29 million Ghana cedis. Beyond caring for the well-being of the citizenry, insurance can and thus contribute to economic development through the long-term mobilization of funds for infrastructure and the general development of the country, as well as minimizing the devastating effects of disasters. According to the National Insurance Commission report of 2020, the insurance industry employed over 13,000 workers, paid corporate taxes of over 53 million Ghana cedis, and mobilized premiums of about 4.2 billion. These are important ingredients for economic development. It is often said that one must, quote, prepare for the unknown by studying how others in the past have coped with the unforeseeable and the unpredictable The evidence is out there that countries that have developed or effectively coped with unforeseen disasters did so by the power of insurance. According to the Insurance Information Institute, the September 11th, 2001 terror attacks on the United States of America produced insured losses in excess of $32.5 billion across various lines of businesses, such as property, business interruption, aviation, and workmen's compensation, life and liability. It is worthy to note that insurers became the first responders during the crisis, and property were restored because of insurance. Again in Ghana, we paid claims of over $330 million, 330 million Ghana cedis during the June 3rd, 2015 twin fire and flood disasters. So this is a typical example of us using insurance to restore people to their situation prior to the disasters. And it's more or less a follow-up to what was used in 2001. Now, it must be noted that we could have done more if the other properties for which we did not pay for did have insurance cover. In conclusion, I must say that insurance can contribute to the economic development of the country by promoting the well-being of the people, and increasing insurance penetration will be a matter of course. Perhaps more education and awareness creation will bring the benefits of insurance in clearer terms to the insuring public. Importantly, we can achieve a lot by making insurance a way of life. Be the change you want to see in our society. After all, it starts with you. Thank you very much for your attention. Yes, Mr. Moderator.
Thank you very much, Mr. Coverson, for that brief but very insightful presentation. I do have a few, maybe one or two questions. We all know how important insurance is, and yet we still have a great number of people who are just not protecting themselves against any unforeseen circumstances. What is the association doing? And I think that one of the major reasons really is about how stressful people have said that it is to get their claims being paid when any event occurs. Or what efforts is the association putting in to get people to trust the process and be confident that should any event occur or should they be exposed to any risk that occurs, their claims or benefits will be paid to them when they need it?
Thank you very much for the question. And let me say that generally the industry is doing a lot. One thing is that as an industry, we have formed what we call the Insurance Awareness Coordinators Group. And that group has the objective or the responsibility of promoting insurance education across the country. We realize that the biggest challenge that we have is the issue of perception. Sometimes you will hear people talking about how stressful it is to file a claim. Now, when you ask the person speaking the simple question that, have you had any experience like that before? He will list he'll give you a chain of people who did inform him. So my brother said that his friend who works at this place, uncle, did say that when he had a claim, it wasn't paid. But that's perception. And let me say that to curb that perception, we are trying as much as possible to improve on insurance education. And we are doing that vigorously. Let me also say that we've had support from institutions such as the German Development Cooperation for us to embark on a number of projects in terms of awareness creation. But beyond that, we realize that one of the major challenges, among others, is the issue of claims payment. And therefore, for us at the association, in 2018, we did establish what we call the Complaints Management and Advice Bureau. Now, the Complaints Management and Advice Bureau is that it has the objective of promoting what we call the 3-tier resolution system. So if you are a policyholder and you have a challenge, your first point of call should be the insurance company. After all, strictly speaking, because of privity of contract, if you buy a policy, the contract is between you and the insurance company. And so the insurance company should be the first place that you visit in case you have a challenge or in case you have a claim. If the issue is not resolved, the association's Complaints Management and Advice Group can come in. And what it does is that it has a well-equipped secretariat which allows the complaint to be received and also to be examined on its merit. But as the first rule of natural law says you must listen to the other side. So we listen to both the insurer and the insured to find out exactly what the issues are and to establish the extent of liability. Once there is clear merit in the issue presented, the natural thing to do is that the insurance company is asked to pay the claim. On the other hand, if the issue is not resolved satisfactorily to the client's, if it's not resolved to the satisfaction of the client reserves the right to go to the National Insurance Commission, which also has a complaints bureau that resolves such issues. Now, I must put on record that from our statistics, about 90 to 95% of the issues referred to the Complaints Management and Advice Bureau has been resolved. And indeed, the CIMAP is now a model that other countries are trying to see if they can use, adapt, especially those other countries on the African continent. And the African Insurance Organization has featured it in its periodicals because of how the system works. Now, but also ultimately because we are in a country of rule of law, if a policyholder goes through these three systems and still has a challenge, then he goes to court. But let me be quick to add that policyholders are encouraged to use these resolution mechanisms, but it doesn't stop a policyholder from moving straight to NIC or to court. But it's advisable because, as I said, the statistics speak for volumes. And we work as an industry. We speak to NIC when the need arises. And even some issues can be referred to us. We had one or two issues because we are the practitioners. And so we have the know-how to look at the issues on merits. That does not take anything away from NIC. But these are some of the things that we are doing to make insurance a worthwhile experience for everybody. Let me also add that CIMAP is not just for complaints. It is also there to educate you on the types of policies available and what will suit you in case you give your need. And so these are some of the things that we are doing, not just as an association, but as an industry to help us, to help make insurance the Ghanaian way of life. Because it is when insurance becomes the Ghanaian way of life that the other things, other indicators like penetration and coverage will improve as a matter of course. Thank you very much, Mr. Moderator.
Thank you very much, Dr. Kwabeson. So at this time, we'll be able to take any question feedback from the audience. If you'd like to ask your question or give your suggestion verbally, you can raise your hand and we would allow you to unmute and speak. You can as well send in your comments via the chat box, and then we'll read it out and then get a response for you. We currently have a few comments and we also have some hands up. But before I call you, Frank, I'd like to read a few of the questions and the contributions that we have. So we have from Yvonne asking, what is the average time for a claim to be paid? And Yvonne is also asking or suggesting that the NIC should come up with SLAs where payment of claims are concerned. So Dr. Kwabeson, any response to that before we get Frank to speak?
Thank you very much. You'll agree with me that we have two broad categories of insurance in the country. We have the general insurance or the non-life insurance, and then we have the life insurance. The NIC has a claims payment guideline, and that serves as a yardstick for us to measure whether or not, or the time period within which a claim must be paid. Don't forget that there are processes involved in claims payment. Without going into technical issues, some of the basic things that you need to do is, first and foremost, there should be filing of the claim. And once claim is filed, there should also be examination whether or not there's somebody, the company is liable or not. There should even be investigation whenever it's possible. Sometimes the parties must sit down to negotiate on payment terms and so on and so forth. And so the issue of payment of claim comes at the last end when these, as I say, the backroom issues, investigation and so on and so forth have been conducted, and then liability have been admitted and quantum have been agreed and so on and so forth. But the guide is that normally, all things being equal, these processes should take not more than between 2 weeks and 1 month. Unless, but that is subject to you, the claimant, presenting the right documentations. So to help in the process, NIC has instructed or has given the guideline that all insurance companies should have their claims manual filed with the NIC. And apart from that, there should be some note on the policy documents indicating what would be required in case there's a claim, and even, let's say, a checklist of the things that you need to file a claim, just to make sure that the claim process is very quick. And also, policyholders should also know what to do when there's a claim, and so on and so forth. So I cannot just say that it takes A or B or C, because, for example, I did some work for the micro insurance sector with Micro Insurance Network. And what came out was that every company had the average time of payment of claim. But the guide is what has been provided by the NIC claims guidelines. It gives clear indication as to the number of days that each stage of the process must be accomplished, and eventually claims paid. But all things being equal, I think that a month should, between 2 weeks and 1 month, all things being equal, should suffice for claims to be investigated, admitted, paid together, and so on and so forth. Thank you very much, Mr. Moderator.
Thank you very much. So we have Frank Owusu's hand up. Frank, you can unmute yourself and go ahead.
Thank you very much, and good morning to the panelists. Yes, in fact, insurance is very, very important. But my main problem is with the insurance agents in Ghana, especially selling a policy to those who cannot read and write. They will tell them all sorts of things. Meanwhile, in reality, that wasn't the case. So I want to ask, what is the National Insurance Commission doing about this? Because some portray policy as an investment. Meanwhile, at the end of the policy period, the policy holder will go and he sees something different. Meanwhile, the agent is no more there. In that case, what is NIC doing about this to the insurance company and those agents? Then also, you will do insurance along the way, you realize that you want to stop. Then you are going for what you have contributed. They will tell you, oh, once you couldn't complete, the money is not refundable. We will not give you anything. I want to know if that is true or not. Thank you very much.
Thank you, Frank. So we will take all 3 questions and then we would ask our speaker to address them. So we also have Nicholas Abaka. So Nicholas, please go ahead with your question.
Okay, good morning. The complex of shops. Can I go ahead and just insure only my part of the shop? So like the general insurance, like the things in and all that against fire, flood, or theft. Can I do that? And if I can do that, what are some of the documentation that I would need to do that as well? Thank you very much.
Thank you for your question. We also have a question from Jerry. Jerry, kindly unmute and then ask a question. So after these 2 questions, we will open the responses to either our guest speaker, or Mr. Ando, or Dr. Kwabasin, and any of you can address any of the questions. So Jerry, kindly unmute your mic and then let us hear from you.
Okay, thank you very much for the opportunity. I wanted to find out from Dr. Akwabasin that a lot of education is ongoing, but I don't know whether maybe he mentioned earlier on the penetration rates currently, but it looks as if the penetration rate is still very low. Now, over the years, you have been doing you have been doing some education, What is it that is still making it difficult for people to embrace, insurance in the country? Is it the case that the language that you are using is not something that resonates with them, or that the proposals or the promises or the product packaging is not appealing emotionally? But what I've realized is that, and I've been in this industry for just about a year, you, the experts in these industries, tend to love to use a lot of technical jargons, and you try to be more inward looking instead of looking at what language actually resonates with the target audience, the language that the other person understands. So I want to find out from you, what is it that is not making your messages so appealing to get the masses to actually patronize insurance services? So if you can respond to that, thank you.
Thank you, Jerry. I've just had information that Mr. Andor is not available, so Dr. Kwabasin, looks like the spotlight is on you today. So we actually have 3 questions. The first one was about agents who were not communicating the right information, and the second one was about one person asking about what insurance package to choose or adopt for his shop, and the last one from Jerry was about education and penetration. So Dr. Kwabasin, over to you.
Well, part of it is visiting the sins of the fathers or the children, but that's okay. Okay. Now, the first questioner asked what NIC is doing about the issue of agents misrepresenting or mis-selling the products. Even though it's directed to NIC, I think our fortunes are tied. So GIA and NIC, we are all working towards one goal. Let me say that per the law, an agent, properly so-called, should be licensed. And NIC has the responsibility of licensing agents. And so we must make clear distinction between a person licensed by NIC to be an agent and somebody who carries himself as an agent. If the person is licensed as an agent, it means that for all intent and purposes, he represents a company, because agent simply means that there is a principal. And by the definition of agent, in this particular context, the agent should represent just one insurance company. And so if the person is an agent of an insurance company, it means that the principal will be held liable to all actions that the agent undertook within the purview of his authorized limits. So if it's working within that limit, then it means that the responsibility to ensure that he abides by the rules and is very clear on issues should solely rely and rest on the shoulders of the insurance company. But then the point is that because it's an industry and our fortunes are tied together, we cannot sit aloof and say that it is the responsibility of companies to ensure that their agents do not mis-sell. And so we leave them to the fortunes of the company. We don't do that. So as an industry, we have tried very hard to undertake a number of agency training programs. Let's say that the companies do train agents on general insurance issues, general, not in terms of non-life insurance, but insurance in general, and then on the specific product that they are selling. Also, what we as GIA do is to extend the conversation and then deal with aspects that has got to do with ethics and so on and so forth. And fortunately for us, we have a number of institutions within the industry. We have the Ghana Insurance College, which is also undertaking similar program to train agents. I know that NIC has trained about 10,000 agents. And also, we have the Insurance Awareness Coordinators Group also coming together to ensure that agents are trained with help from other institutions. Importantly, I can say that we now have a vibrant National Agents Association of Ghana, the NAGIA, is also helping and ensuring that people or agents properly so-called do not missell. But it's human nature. So we are still collaborating to ensure that we get the right agents, because indeed, it's not everybody who can be an agent. And again, maybe because of competition, they'll want to garnish the product and then sell it in a way that, in a manner that, but that will not be the case. That should not be the case. The industry as a whole, that's NIC, GIA, NAGIA, IACG, Ghana Insurance College, and in fact, the Chartered Insurance Institute of Ghana, we are collaborating because no one particular company can be able to solve that problem. We are collaborating in various ways to ensure that the agents are well trained, and then, because they are first point of call, more or less, especially in the life sector, they are well trained to be able to undertake their job efficiently and effectively. But if you have an agent who may sell, do not hesitate to talk to the company or the other bodies that I've mentioned, because there are ways of dealing with the agents and ensuring that they do the right things. Now, in terms of whether or not somebody can insure his content, the simple question is that there's a principle of insurance called whether or not the person has financial interest in a particular, what they call the insurable interest, whether the person has a financial interest, what does the person stand to gain or lose in case there is a fire or there is any untoward event. If insurable interest can be established, then it means that the particular item or content can be insured. That's the guide. Because if you come to, let's say, if you come to the non-life sector or the general insurance sector, there are core principles that guide whether an item can be insured or cannot be insured. Some of them include indemnity, that's restoring you to the state in which you were before the event occurred. Insurable interest, which means that there should be evidence that you are going to lose financially in case the incident occurred. Then we have contribution and others. So if the content in the room, there's evidence that you own it and you are likely to lose out financially in case a fire or any event occur, then it means the content can be insured. And I'll urge the one who asked the question to get in touch with the very good, all the good companies that we have in terms of the general insurance. All of them are doing very well. Get in touch with any of them and then get your content insured, because you have insurable interest, you are likely to lose financially when something of the sort occurs. So do talk to.
Great.
Now, last but not the least, the other question.
Hi, Dr. Kwabason.
Yes.
Yeah, many apologies. I think we are a bit pressed for time. So what we would like to do is the event is still ongoing. We have 2 other speakers. So what we want to do is to hold off with this session, but we really hope that you stay on the call because we want to be able to address all the questions that are coming through. We still have some hands up. We'd like to plead that you just hold on so that we move into the next session while we are still talking about the insurance industry. So once we come to the the final part, we'll put all the unanswered questions together. So Dr. Kwabasen, please stay with us. We really, really appreciate your time. We don't have a lot of events where we get people like you to really help us and educate us. So kindly stay on the call with us, and we'll just move into the second session. But before we do that, now what were your thoughts on the call? We've had two people talk about the industry penetration, digitization. People have asked questions. So what are your thoughts?
No, I think these are very good conversations we are having to sensitize everyone on the insurance industry and the various innovations that have happened and what we can hope for. That's why we've put this platform together. So I hope it's also quite interesting to other people on the call. So with that, we'll move into our next speaker. So our next speaker is Abna Amwa. She is the Deputy Chief Executive Officer of the Ghana Stock Exchange. She is a very accomplished investment banker and a capital markets expert who has led many landmark transactions for more than 20 years. She's experienced in covering listings of stock on the stock market, trading, M&A, advisory, investment research, among other things. And she will be here talking about the role of patient capital, long-term capital in economic recovery. Abna, if you can hear us, over to you. You can kindly unmute and share your screen.
Thank you very much, Nana, and good morning to everyone on the call today. Please let me know if you can see my screen.
Yes, we can.
Okay, great. So good morning again to everyone. Mr. Joseph Ando, I hear he's left us, but I know the commissioner is still very much with us today's call. To the CEO of the Ghana Insurance Association and to Naneje and the entire Black Star team, thank you very much for inviting the Ghana Stock Exchange to partner with you on your seminal annual webinar series, which is aimed at educating investors about our financial services industry. And from the questions that have been posed, it's very, very clear that our work is far from done. And so congratulations to Black Star, and this work, we will continue to do it together. For me, Mr. Ando's address left me with 3 key takeaways today.
Abna, can you hear me?
Yes, I can.
Yes, if you don't mind, sorry for cutting you. Do you mind putting your PowerPoint in a presentation mode so we have a full screen view?
Okay, is it too small? I'd like to keep it this way if it's not too small.
Okay, if you'd like to, then it's fine. Yes, all right, thank you.
Thank you. Mr. Ando's address today left me with 3 key takeaways. And I think these were very, very important things for all of us to think about, and especially for the insurance sector to look at as well. The 3 key takeaways for me were that the new capital requirements, the NIC itself is moving away towards a risk-based capital for the industry. This essentially means that the larger your capital, the more risk essentially you are able to take on. The second thing Mr. Ando said that stood out for me was that the Ghana's insurance industry is small, but it has the capacity to grow, to retain more in Ghana, to invest in technology and do more things for the nation. The third takeaway for me was that the NIC is looking at implementing a new capital regime and framework that is looking to implement in the next 2 years. And the key component of this new framework is how the industry communicates with all stakeholders and engages with all stakeholders, including shareholders. And all this means that the Ghana Stock Exchange provides a solution to the insurance companies in Ghana. Everything that Mr. Ando said, capital and investments are the two critical solutions for the insurance sector. And the Ghana Stock Exchange provides this platform for access to long-term patient capital and well-regulated investments. That is why for us, it's important to partner with you, Blackstar, and to engage with this industry and to go beyond the two insurance companies that are currently listed on our market and get all the insurance companies on our market. Today, the theme for this 2022 webinar is very much aligned with what the GSE is thinking. And I call my presentation today, Building Back Stronger and More Sustainable, because there's no need to grow in spurts, but to grow continuously in a sustainable way. So my presentation today will take you quickly through what the GSE's mission is and our value proposition. I'll talk very shortly about our equity markets, our debt markets, and some key initiatives that will help this industry as well as others grow back stronger and in a more sustainable way. The Ghana Stock Exchange was started about 32 years ago, and our vision is very, very simple. We want to become an internationally recognized securities market relevant to Ghana's economy. And how do we plan to do that? By providing an efficient securities market for national economic development through access to long-term capital and investment. That is the reason we are around. Our value proposition today, we look at it from the issuer's point of view and then from the investor's point of view. But of all our value propositions, I want us to focus on two key items: access to long-term capital and access to long-term returns. The insurance industry, the regulator recently required your minimum capital to be 50 million Ghana cedis. That was the minimum required by the regulator. And yet your regulator is seeing more and more ceding of business outside of Ghana. It means that if the insurance companies want to be relevant to the Ghanaian economy, that minimum capital is not cutting it. I'm sure all of the companies on this call today want to become global champions. And so the need to have very strong capital that facilitates the work we need to do, the investments we need to do in educating the general public, in systems, in technology, in people, in products, in our ability to retain more capital, means that our minimum capital must be much bigger than the 50 million that our regulator has set as the floor. And this again is our challenge to the industries or to the companies today to come to the Ghana Stock Exchange and avail themselves of this capital. Long-term patient returns as an investor. The insurance companies today remain one of the key investors on the Ghana Stock Exchange. All the premiums you gather, as your regulator says, gets managed in your investment portfolio. How well are we managing this investment portfolio to ensure we are getting adequate returns to meet our obligations and pay claims that fall due? So this is another angle that the Ghana Stock Exchange presents in value to the market. The GSE in 32 years has set up 3 markets to facilitate access. We have the main market, which was the first market we set up in 1990, where many of the large companies are listed. In fact, the 2 insurance companies, SIC Insurance and Enterprise Insurance Group, are listed on the main markets. In 2013, we set up our second market, which is also an equities market, just like the first one. And we call that the Ghana Alternative Exchange, or the GAX market. The GAX market was our solution to the SME sector, whose capital needs are legendary. So we set up this market to support them to raise long-term capital and for investors to have access to this asset class of growing companies. We've had very limited success with this market, and we're actually reviewing the whole concept of the GATS to see how we can make it more attractive for more issuers on that market and for investors to be also attracted to that market. About 7 years ago, we set up our third market, the Ghana fixed income market. And that is our bond market, or the market where government treasury bills, government bonds and notes, as well as corporate bonds are listed and traded. The fixed income market, as I said, is only 7 years old, but it has grown very quickly to become our largest market. Trajectory has been one of growth, but in the last 10 years, we've seen some up and downs in the performance of the market. But overall, the performance of the market as seen in the returns to investors as measured by the composite index has been one of significant growth in the last 32 years. This slide shows the annual returns on the market. In about 2 of these years, I think in 2003 and in 2013, the Ghana Stock Exchange was voted the best performing market in the world. Last year, we were the second best performing market in Africa and one of the best performing markets in the world, with a 43.66% return on the GSE Composite Index, over 38% return in dollar terms. This year, like many other markets around the world, our performance is down. As at June, we were about 8.74%, and as at yesterday, about 11% down. So this performance, unfortunately, reflects the current macroeconomic environment and the challenges many corporates are facing, and the GSE market also is responding to that. Often we get news that Ghana's market doesn't respond to anything happening in the economy or the world, but as you can see from this chart, anytime our market was down, we were reacting to something significant that was happening in Ghana, such as the power crisis of 1999, or the global financial crisis of 2008, or the financial sector cleanup from 2018, and of course this year's global and economic performance. Our equity markets have helped companies raise over 5.4 billion Ghana cedis in the 32 years. It's modest, but it shows that you can raise capital on the market. The largest capital raise has been by MTN, where in their IPO in 2018, they raised over 1 billion Ghana cedis. This chart shows some of the companies that have raised capital. We see SIC Insurance, over 35 million Ghana cedis in their IPO, Enterprise Group, over 219 million Ghana cedis. This is important for us to look at. This is what has allowed some of these large insurance companies diversify their business assets and grow. And this is what we invite the others to do. This chart shows the value, the cumulative value of securities traded or activity on the market. Cumulatively, the market has traded about 6.8 billion Ghana cedis worth of shares in 32 years. Again, we're not where we want to be, but it shows a steady growth, especially in the last, since 2008. This is the number of companies that have raised capital that have been listed on the stock market. That's at the end of every year since 1990. Currently, we have 36 companies on our equities market, 30 of them on our main market, and 6 on the Ghana alternative market. And this is a number that we want to grow. Our target at the GSE is that in the midterm, we want about 100 companies, 100 solid companies on these markets. The market capitalization as at the end of July, as at the end of, as at yesterday was about 64 billion Ghana cedis. This represents about 10% of Ghana's GDP. Our aim is to treble this figure in the medium term. And how we're going to do this is by attracting more companies to be listed on the Ghana Stock Exchange and for them to grow their market capitalization. Having looked at our two equities market, I want us to take a look at our fixed income markets. As you can see, we set up this market in 2015, and every year, the volume traded has grown significantly. In fact, since 2018, our volume traded is almost doubling every year. 2019, we traded about 55 billion volume of securities on the fixed income market, doubled that to 108 billion in 2020, almost doubled that to 208 billion in 2021. And as at yesterday, we are at about 130 billion volume traded so far this year. Not quite doubling what we did last year, but very much on track to achieve at least 20% growth on last year's figures. Cumulatively, this market has traded 100 billion volume of security so far since its inception. Corporates have been active on this market as well. About 12 corporates have raised over 13 billion Ghana cedis through the issuance of bonds on this market. Again, showing that the GSE is a platform for raising long-term patient capital. Many of the corporates have issued 5-year bonds. Some have gone up to 10-year bonds, and it gives them the flexibility to grow their business and pay back investors in a more sustainable way. So collectively, between our equities and our debt markets, we have provided over 18 billion Ghana cedis in long-term patient capital to corporates in Ghana. All insurance companies take advantage of this. The value of outstanding securities is, as of June 2022, is over 180 billion Ghana cedis. All the part of the graph that is in blue shows government securities, and the part that's in orange shows the value of corporate securities. This trend is normal in bond markets, but for us, our challenge is how to lengthen that orange bar, how to get more corporates to come and issue long-term bonds on the market. And I'll tell you some of the things we are doing to address this challenge. With that said, as I said, about 12 corporates have raised almost 18 billion Ghana cedis, 13 billion Ghana cedis on the market, and have done what we call shelf registration of about 17 billion Ghana cedis of instruments on the market. The shelf registration means that you come to the market and say, I want to raise, say, 1 billion Ghana cedis, but over a certain period, over 5 years. And every year, as your business growth needs determine, you come and raise a percentage of that 1 billion until you exhaust the amount you plan to raise, after which you can now register a new shelf. And as you can see from there, several companies, mostly in the financial services industry, have taken advantage of that. Letshego, for instance, has raised about 298 million Ghana cedis over 27 issuances. That is what we call the tranches. So totally, corporates have raised through 95 different tranches about 13 billion Ghana cedis out of the 17.6 billion registered today. Your last where is the money coming from? Insurance sector, it comes from investors, it comes from retail investors, but there's a growing asset class, or there's a growing special group of investors on the Ghanaian market, which gives us lots of encouragement and lots of positive feelings about the future. And this sector is the private pension funds. 10 years ago, we privatized our pension funds, and that is the tier 2, tier 3 component, and they've grown significantly. Currently, they are even larger than SNET. Collectively, this group has their regulator allows them to invest in asset classes up to various allocations. And we are seeing that in the corporate debt securities and in the ordinary shares or listed share securities, even though their maximum allocation is 35% for corporate debt issuances and up to 15% for listed equities, we are seeing them very, very much at the low end of what they are able to take out. The last significant public offer in Ghana was in 2018 with the MTN IPO. And many of these pension funds are asking for new investment opportunities on the market. On the debt side, they have up to 6.3 billion to invest in corporate debt securities listed on the Ghana Stock Exchange. On the equities side, they have up to another 2.6 billion Ghana cedis to put into equities listed on the Ghana Stock Exchange. And this is where the funding is coming from. Currently, over 95% of their investments are in government securities, and they are looking for good companies to diversify into. This is one of the key areas we are calling on you to target. Of course, aside the institutional investors, we have a lot of foreign portfolio investors also playing actively on our markets. In fact, when you look at the values traded by nationality, foreign investors still account for over 60% of trades on the equities market. That is another source of capital for a company that is looking to raise capital. These are some key initiatives the Ghana Stock Exchange is undertaking to develop our market. We're looking at new products and services for the market. The regulator, the Securities and Exchange Commission, has just approved rules to establish a green market, and very soon, before the end of the year, we will be launching our green market, our green and other sustainable themed market. So social bonds, green bonds, gender bonds, blue bonds, etc., can now be listed on the fixed income market. We are also in the offing to, once approved by a regulator, to launch an OTC market, over-the-counter market, for public companies that don't want to be listed but want to provide a platform for the trading of their securities by their investors. This is a market that the rural and community banks can take advantage of. Unlisted public companies like Shell, like NIB, like PZ, CFAO can take advantage of and provide a platform for their investors to trade. We're looking to introduce and enhance the market for exchange-traded funds. We currently have one ETF on our market. We are looking to have more of them on the market. REITs, real estate investment trusts, that is a product that should be of interest to the insurance industry. And then, of course, key market infrastructure like a rating agency that will help the development of the debt market, the corporate bond market. It's something we are working on very closely with the Ministry of Finance, the NIC, and the NPR, as well as the Bank of Ghana, to introduce to the market. A market will only grow if we have more companies listed on the market. And that is why we are calling on insurance companies to list on the market, banks to list on the market, financial services. This is an industry many Ghanaians understand. The mining companies, we're also working with them to list them on the market. Government has holdings in various state-owned enterprises. We're shortlisting them and seeing those that are market ready to come to the market. And the private sector as well. There are many private companies that are now open for partnership, true partnership with other investors, and we are looking to them to also come to the market. When you're an investor on the market, your investment portfolio is as good as the information you get to back your investment decisions. And so we're looking to strengthen disclosure requirements on the market. ESG reporting, the SEC has just approved ESG reporting framework, and we'll be working with all the issuers on our market to adopt ESG reporting, so we are in line with global best practices. So the market, we're looking really hard at introducing mark-to-market guidelines and rules for the market. To ensure this is sustainable, we are working with various stakeholders, especially for the fixed income market, to agree on a framework for determining closing prices for the market. Many investors, many asset managers say, oh, when I invest in the fixed income market, I never make any losses. This is important. This is a very important tool for us to have, so that the whole market is being measured according to the same benchmark, to the same yardstick. So mark to market is something we want to see insurance companies adopt. And of course, we are working also to improve our market surveillance. Very soon, you'll see the GSE launch an RFP for new market surveillance systems, technology to support our work in terms of doing surveillance on the market, to give investors assurance that issuers are doing what they need to do and the market is being organized in a fair and equitable manner. Investment literacy is an important initiative for us. We are working with institutional investors, youth workers, investment education on social and traditional media. Please look out for our work in partnership with the industry to do this work. And that's why for us, the Black Star webinar series is important. The things we're putting out on TV, on radio, on social media in partnership with the Central Securities Depository, the Ghana Securities Industry Association is critical work. And of course, webinars like today with the questions that have come up shows that our work in terms of financial literacy, investment literacy need to carry on. Stakeholder engagements are important for us. We need to continue to engage with our policy makers. We're very thankful to the Ministry of Finance for confirming in this mid-year budget that capital gains tax will be restored for another 5 years. And we look forward to working with the whole team at the Ministry of Finance to get this passed to the next level. So working with our institutional investors, our regulators and market operators to strengthen and deepen our market is critical. I think the theme for this year's webinar series is very critical, how we build back stronger, but not just stronger, in a sustainable manner so that we can withstand local and global shocks. Thank you very much.
Thank you very much, Abena, for the conversation. It's always insightful to hear you speak. We have some comments and questions in the chat box, so I'll just read them out so we get some feedback from you. So Khalid is asking if you would agree that SEC has lost it by not previously quickly stepping in to regulate some companies like Men's Gold that took advantage of Ghanaians as per key initiatives you listed above. So if you can comment on some of the schemes that have been coming on and the steps that are being taken to regulate them.
Thank you very much. I think the importance of having sanity in the financial or in the investment industry is very, very important. And the responsibility for some of these things lie not just with the regulator, but for all of us as investors that interact with various companies every day. Let's take note that Men's Gold was not a regulated company. It was not regulated. The SEC had never licensed Men's Gold to do what it was doing. So you as an investor that goes there and says, I want to do an investment with a company, what's your first obligation? One, who is the regulator of this company? Is the insurance company you are buying a product from, are they regulated? Are they licensed by the NIC? Have you seen that evidence? The company you want to make your investment with, are they licensed by the SEC? Is the stockbroker or the person telling you they can buy some treasury bills for you or bonds for you or buy stocks for you, have they been licensed by the GSE to do that activity? So that first level of due diligence falls on us. I think many people were chasing some of these get-rich quick schemes and not taking advantage of or not taking care of the due diligence that rests first and foremost on them. But having said that, I agree also that our regulators needed to act more prompter to restore sanity into the market when some of these fraudulent schemes come up, or where some of these institutions that appear to be performing certain functions that mirror investments, but are falling through a crack of regulatory crack come up to educate people. I remember very well the SEC put out notices that this company was not licensed by them, and any promises to that effect should not be taken by the investing public. So I know the SEC has strengthened, continues to strengthen its oversight responsibilities and making sure that some of these Ponzi schemes are generally shut down very quickly, and the market is informed about that. And I think these are important tools to put in place for the sanity. Thank you.
Thank you very much, Abna, for that. I hope, Khalid, your question has been answered. Abna, if you would just hold on the call for us just a couple of minutes, about 10 minutes. We have our last speaker on the call, and then we can bring you back for the Q&A sessions. Is that okay?
That's fine, thank you.
Sure. Thank you very much for that. So our last speaker is Mr. Joseph Appiah. He is a vice president at Black Star Advisors. He's the head of advisory. He's responsible for overseeing all our advisory mandates. He has executed about $1 billion in equity and debt all over the world. And he has a wealth of experience, which includes M&A, project financing, deal restructuring, negotiation, and capital raising. He's here to speak on the performance of insurance players' investment in allocations. So Joe, please, over to you.
Hi, Na. Thank you for welcoming me. And then it's still a good morning. So good morning to all our listeners who are online listening to us. We hope we'll have a fruitful session. Just to draw from what my colleague Abna said, I was quite interested in the fact that SE is doing some more to bring in new products, for example, within the emerging market. For example, like the green bond, she talked about the O2C market, as well as the EFTs and then the gender bonds. I believe they are the new ways to go as a company. And as a financial advisor within this industry, we are happy to welcome this initiative from the SCE. Delving depth into my presentation, I'm happy to say most of my colleagues have spoken a lot about the industry. So I want to focus more or less about our industry key players, which are the insurance companies. It is quite interesting to note that insurance companies are one of the most liquid, if I would say, a sector within the global business space, and they contribute to more than 33 trillion in financial assets to the economy. And it's quite interesting that we move as a company, we try to open up for us to see what's within the global space it's happening, so that as local space, as we operate in within the global economy, we would be also be able to copy and then make interesting inputs within our fields. Just to dig a bit deeper into the insurance company, I would say the life insurance as well as the non-life insurance and then the composite insurance made a chunk of their investments within the bonds in 2021, which is just last year. And most of them did this because of the guaranteed returns as well as the liquidity needs they needed as a company. And also to hold cash to help them to pay premiums or claims as and when they are raised against the company. But it is interesting to note that looking at, despite COVID-19 and its impact on the stock markets beginning of the outbreak, I could confidently tell you that the insurance managed to really achieve positive returns within the industry. Okay, and it's quite interesting. Okay, so just to also, just a sec, am I? Hello, can you hear me?
Yes, Joe, we can hear you.
Okay, that's fine. Yeah, so just to share a bit and throw more light on the industry we are operating now. Yes, as I mentioned, for example, in as much as currently looking at the stock market, we know, for example, in terms of the New York Stock Exchange, the London Stock Exchange, the Deutsche Börse Stock Exchange, we could clearly see most of them are running on the bearish side based on the policies from the ECB as well as the New York Fed to draw out more than trillions of euros and dollars from the system because they believe most of the companies are being overvalued and other stuff. Now, digging deep into the life insurance, I would say for the life insurance industry, one thing to note is that more than 50% of the investment for life insurance went into the bonds. And it is also important to mention a few companies that really thrive within the industry. For example, if you pick a company or two countries which I would put in perspective, the first one has to do with Mexico, and the other one has to do with Portugal. I would explain in further slides so that we be able to understand what actually happened. So, for example, in Mexico, we had bonds, or most of the insurance companies within the life insurance contributing more than 84% of their cash flow in bonds, as well as Portugal having more than 63% contribution within the bond market. It's quite interesting for us to also know that. So when you look at typically the asset locations for the life insurance companies within these countries, it's something I would want to mention that, for example, if you look at a company like Chinese, they invested more than 50% of their investment in bonds. Generally, I would say life insurance invests more in bonds than in equity, but there are some exceptions. For example, when you look at the data in front of us, Denmark, Indonesia, you could clearly see that they invested more of their funds in equities. We have Denmark making more than 46%, as well as the other company, which is Indonesia country, making more than 31% in equity investment. It's quite interesting to note that the goal of this presentation is to open up within our industry to note that for our investment perspective as industry players, it's good for us to diversify in order to make the maximum returns. We all know as insurance companies, yes, the goal is to pay claims as and when due, but it's also important that as a company or as industry players, we are also able to maximize investment opportunities. In so doing, growing the economy as a whole. Going or continuing to the composite index, we would realize that for the non-life insurers, it's quite notable to mention that about 52% also of their allocation went into bonds, and as well as, for example, if you consider a country like Honduras, they invested more than 84% of their funds in government bonds. It's quite interesting to note that on the average, most of the non-life insurance hold a lot of cash because the goal is that for any incident of claim that comes up, they should be able to pay, and these mostly are unpredictable. So that is why they hold a bit of this in asset. Just to explain a bit further for us to understand, for example, within the life insurance asset allocation, on the average, we had roughly about 14% of the non-life insurance holding close to 14% assets. We had 9% of them having that, and 9% for non-life or the life insurance. It's also good to mention that looking at example or key performance for some other countries. For example, when we look at non-life insurers for Argentina, Germany, we realize that most of the companies within these regions or jurisdiction, collectively, they invested most of their funds, about 33 up to 34% of their funds in collective investment schemes. The goal was to diversify their investment and to help maximize returns they have for their stakeholders as well as their shareholders simply. It's quite notable to also mention that typically, I'll pick two interesting companies which I believe we can really delve into and then discuss about them. For example, when we pick the composite insurance, that is the insurance companies that do both the life as well as the non-life policies. Picking two companies just to explain, when you look at El Salvador as well as the Gelteleme, they invested close to 46 and 26% of their assets significantly in they maintained that position within the cash so that they would be able to pay claims as and when necessary. It's quite important to put two or three companies or three key countries in perspective based on their assets allocations as well as the returns they were able to generate within this period. For example, we'll look at Singapore, we'll look at Malaysia, and we'll look at Latvia. When you look at the Singapore, we realize that close to 70% of their assets went into the private and public sector bonds. We have 11% going into other investments, as well as holding 9% in collective investment schemes, and then 10% in equity. From the life insurance perspective, we can tell that Singapore recorded a higher returns of 7.4%. And then a country like Malaysia also recorded 9.8%, a bit higher than that of Singapore. Based on investment allocation for Malaysia, we could clearly see they invested close to 50% of their funds in equity, and then 25% covering the public sector debt, 5% going to others, and then 20% holding in cash. The goal of showing this metrics is to open the possibility for our industry players here to also know that diversification is key to investment growth and reduction in risks. It's quite key. So looking at the whole insurance average returns for the various countries, we could clearly see some insurance companies within some jurisdiction making negative returns. We look at Australia that made close to negative 4%. Brazil made negative, also around negative 4%. We could also see a country like Uruguay making around a negative 2% on their investment returns. Into details, I would share, but I want to dig a bit deeper into our markets, which is the Ghanaian markets. Currently, when we look at the economic conditions, we can tell that inflation is hitting 29.8% in June, which was quite driven by a lot of factors, where we can see month on month for 4 months, the various individual contributors going to the inflation, from alcoholic to clothing to transport, as well as to the food and the non-beverage industry. It's quite interesting to mention that when we look at, for example, the GOG investor debt holders, we could see clearly from the presentation that commercial banks hold close to 58.2 billion. We have financial firms holding close to 41.1 billion. We have foreign investors also coming in, and we have insurance companies also coming in with close to 1.4 billion within the sector. But it's interesting to mention that with the insurance companies, We have they holding short-term investment of about 152 million, and then medium-term about 600 million, and then for long-term and quasi roughly combined about 646 million. It's quite also important to mention that looking at the trends, we realize that year on year and month on month, insurance companies' investment within the GOG debt really increased significantly. When we look at the case of the insurance companies, it increased by close to 21% compared to last year, which was 1.2 billion. It hit 1.4 billion as of June 2022. Now, looking at the asset allocations for the insurance companies in Ghana, typically most of them within the non-life insurance hold close to 34% of their asset allocations in time deposits, 20% in real asset, for example, like lands and building. And it's quite important for these assets that fit into the land and building. The NIC, which is the regulator, mentioned that most of these that would only be recognized as investments are those that have land titles covering these land and buildings that were for the insurance company. We could also see GOG as well as the others spread across. This is same for the life insurance industry. When we look at the year to date, you can clearly see up to 2020, we see the portfolio mix for the investor. Now, we clearly see that for our insurance industry, most of the participants or industry players are quite focused on short-term investment. By looking at the jurisdiction under which we share data against some of the interesting returns that came against, of course, there are other indicators, for example, like economic indicators that came through. It's important for us to mention that long-term financing by insurance company is critical for economic growth. No two ways about that, because we believe it's a boost to be able to grow the economy by investing in other interesting investment vehicles that essentially contribute to the growth of the general economy. Now, it's also good to mention that based on the insurance asset and liabilities, life insurance, I believe one way to really reposition ourselves for prospects for long-term investment is to be able to incentivize our people to invest in long-term assets because of the illiquidity of the insurance liability. However, it's interesting to mention that, you know, with all this being done, it's quite critical that we have the interest of the consumer, which is the final claim holder, at hand in terms of the life payment or the claim payments they need to make to them. Now, drawing down, it's also quite important that as industry players, we market consistent with market consistent valuation in solvency balance sheet. We want to make sure that as industry players, we invest in certain asset classes, for example, in infrastructure, private equity, and some other interesting chargebacks, which will be able to boost a balance sheet as a company. Now, delving into the policy issues and its implementation, it's quite important to mention some key factors, which I won't go deep into it, that we know the final objective of the insurance companies are to be able to pay policyholders as and when these incidents occur. But it's quite important that as highly liquid as the organizational industry players is, it's important to make sure that these funds are being invested in a quite balanced portfolio that brings higher returns to the insurance players in the sectors. It's also important that it's quite interesting that my first colleague who spoke mentioned about the risk-based capital regulation, which I believe is quite critical, so that it gives room for some of the industry players that have bigger cash to be able to diversify their portfolios into longer-term assets. Now, to draw on my final take, I would say it's quite critical that we keep up-to-date information. But what I want to say is that insurance needs to now embrace a greater complexity in what they are doing within their investment field. And it's quite critical that to diversify their portfolio and enhance their yields, it's quite important that the insurance companies also have the opportunity to partner with some of the financial advisors as well as asset management firms to be able to understand more the investment vehicles and opportunities available for them to be able to participate and make huge returns within this industry. It's quite also important to mention about the emergence of ESG and the importance as insurers to also inculcate that or actually embed that within their investment decisions they make during diversifying their portfolio. I would say thank you for the little take I've shared and open up the floor for questions. Thank you.
So, thank you very much, Joe, for that. So we'll open up the Q&A sessions, and we've had a backlog of questions. So I will start with that. If you have a question, kindly do raise your hand, and then we would come to you. So Mills asked earlier, and I hope Dr. Kingsley is still on the call. He asked earlier, what has been the impact of the galloping inflation on underwriting and investment activities for insurance companies? So if Dr. Kingsley would kindly take that question.
Hello.
Yes, we can hear you.
If I understood the question, he's talking about the effect of inflation on the industry in terms of underwriting and so forth. Well, I think that inflation is, as we say, a macroeconomic factor. So it's within whoever is in the industry is affected, whoever is in the country is affected in one way or the other. So we cannot be isolated. Just that what we can do is to take steps to maybe minimize its impact. And so don't forget that if you take the insurer, we are looking at two sources, the underwriting and then the investments. Please, just 1 minute. Just a minute.
It's fine.
Yes. So there are factors within the economy that you and I will necessarily not have control over. And so it is important that we take steps. Perhaps this is just a question. Perhaps maybe we, in order to protect ourselves, we must not only price right, but we must also charge right. And so some of the things that we are doing is to minimize the effect of what we usually call undercutting. That's pricing below the minimum stated amount. And that's something that we are vigorously fighting in the industry. And the regulator is also very much keen on that. So if you look at the new penalty regime in the Insurance Act 2021, it's very strict, and then it's more like deterrent. So for example, if you undercut, there you have 5,000 penalty units. It means that for maybe undercutting or charging below the price, the stipulated price in motor, for example, by 20 Ghana or 10 Ghana or 5 Ghana, you have to pay a penalty of 60,000 Ghana cedis. I think that by and large, if we charge right and then factor the economic environment in which we find ourselves in the pricing model that we are using, we might not necessarily do away with inflation altogether, but it will help us minimize the effect of inflation on us. So it's an education for all of us as industry players, to ensure that we charge right and we do the right things, and we actually underwrite the risk to assess the value and the type of price that we must associate with a particular risk. So these are some of the things that we have to do as an industry to ensure that we minimize the impact of this effect, this factor on us. Thank you.
Thank you very much for that answer. I think Khalid's hands are up. So Khalid, you can kindly unmute yourself and ask your question.
Good morning. My name is Khalid, as rightly mentioned. I want is cited in terms of payment of claims vis-a-vis the 80% uninsured or uninsured public or private sector he is referring to, which he alluded to this particular case, which he mentioned that as a result of business interruptions, deaths, loss of properties, in the case of the 11th September issue that he cited in the American case, where he talked about insurance being paid to the victims. In line with that, he mentioned the Ghana case, which is the 15th, June 3rd, 2015 incident that happened in Accra Circle, which he mentioned that they've paid over 330 million Ghana cedis. The question that I sought to ask, is it based on properties that were lost, that was claimed or paid to the claimants, or based on what? And then as he speaks on the American case, I believe strongly that he was basing his argument on data he had cited, which he mentioned they were fully compensated. But the case in Ghana, is it same? And what data can really attest to this 330 million Ghanaian currency paid to this victim? Because I've watched TV and I heard people talk about injuries that were sustained, because in that case, it's a natural disaster. So I was expecting some form of corporate social responsibility towards such individuals. Let me link this to another side of my question. Insurance companies in Ghana are not customer-centered. The reason why private sector employees and many other Ghanaians, especially my moms and dads who are in our concentrated markets, do not talk insurance, and you cannot speak insurance to them. Thank you.
Sure. Thank you, Khalid, for those questions. Dr. Kingsley, over to you.
Thank you very much. I must say that this is a multifaceted question and heavily loaded. But I've given the source, at least for the American case. I've given that source. I think that the person's question was to first and foremost find out the classes of businesses for which claims were paid, and then whether or not there was evidence of the sort. Let me say that when the incident occurred, what we did was to collaborate our efforts and to look out for data in terms of payments that was being made. Now, we have a summary here. In terms of motor claims, in 2015, the amounts paid in cedis was 26,472,563.58 cedis, 58 pesos. The amount paid in dollars the exchange rate then was 3.7197. So in dollar terms was 1,732,996.3835. Hello.
Dr. Kinsey, we can hear you.
Yeah, I think I saw some instruction. Okay.
Yes, you can go ahead. Yeah.
I can go ahead now. Okay.
Yes, please.
In terms of dollars, I'm talking about motor claims. The dollar amount paid was $1,732,996.35. The exchange rate then was 3.7197. If you do the multiplication in terms of the CD equivalent, it was 6,446,226.52. Then the amount paid in euro terms, don't forget that the pricing, we are looking at the different categories of price that we had to deal with. And even though the Bank of Ghana talks about not transacting in dollars generally, we as an industry, because of the international nature of insurance and reinsurance, we have a little bit of exception. So I can quote in dollars and other foreign exchanges. Now, in terms of euros, the amount that we paid 453,195. The euro then, exchange rate then was 4.1924. And if you do the multiplication, it meant we paid 1,899,974 cedis, 72 pesos. So if you add all, it means that just in terms of the motor claims, we paid 34,818,764.82. Now, in terms of non-motor claims, the CD equivalent we paid was 210,504,072 cedis, 22 pesos. The dollar claims we paid, or the dollar denominated claims we paid, was 23,518,361.78. As I said, the exchange rate was 3.7197. So if you multiply, you get 87,481,250.31. Now, in terms of just the non-motor claims, we paid 297,297,985,322.53. So in total, the claims we paid was 332,804,087 cedis and 35 pesos. We have the data, and my brother can pass by. We can share the data with him. But that is even not the point. The point is that you remember that I talked about perception. We unfortunately are tied up we are more or less tied up in an environment where perception is dominating the conversation. Because in reality, I believe you are even surprised to find out today that we pay over 4.3 million Ghana cedis in terms of claims every single day. The source is the NIC report of 2020. These are facts. And these are big numbers. But the touching story was that at least I was part of a team that paid a claim at the Tudu station. Is it Tudu? The Circle area, the Circle station. And it was to a trader whose husband was a driver and was dead. So these are actual figures that can be verified. The fact that you did not see some presentation on telly, so it's not everybody who wants us to share the story. But I can assure you that these are stories. Maybe as insurers, we've not told our story well enough. And I think that we it's a lesson that we have to take to expand the conversation and then publish claims that we pay regularly so that people become aware that the business of insurance is about claims payment. These are practical issues that we can share in terms of figures and so on and so forth. But my advice is that all of us should join the crusade, because if we say that the private sector is the engine of growth, we as insurers say that insurance is the oil that will fuel the engine for the country to grow. Thank you very much.
Sure. Thank you very much, Dr. Kingsley, for that. Ms. Samoa, I hope you're still on. We have a two-way question here for you and then the audience. So in terms of listing on the market, what are some of the incentives the insurance companies can get if they list on the market? And to our audience, what are some of the things that the insurers are looking at to push them to also list on the market? So Abna, we'll start with you before anyone in the audience can raise their hands and make a submission. Thank you.
Thank you very much. The incentives for listing: one, they can raise capital. Two, their companies can become part of a global network of companies that are listed on exchanges, a very prestigious network. Their share prices can be known, the value of the businesses can be seen. Their governance, the GSC ensures that governance is a critical thing that all the companies listed are adhering to. So that is also strong. And when we are talking about sustainable growth, this is one of the key ways to ensure it. For companies that are still one-person-owned businesses, this is a key way you can ensure continuity of your business by listing on the exchange and sharing risk involved in managing and owning a business. Insurance companies understand risk, so this is preaching to the choir. The final thing is that if you're listed on the stock exchange, you can attract investments from a wide range of people, including our pension funds who invest in companies that are listed on the stock exchange primarily. So these are key incentives or reasons why it's important to list. Look among the global competitors you're trying to be like, and look at the number of them that are listed. I think that the NIC, this framework the NIC is developing around how insurance companies must engage with their stakeholders, including shareholders, must include a requirement for them to be listed companies. Ghana's capital markets is the most, or one of the most important tools for us to achieve national economic growth. And the funds we are all putting aside in our pensions industry, in our collective investment schemes, must look for and find home in well-run businesses with growth potential to invest in. Thank you.
Thanks a lot for that, Abna. You know, I've been trying to listen in and into Abna's presentation and Joe's presentation, and it's quite revealing. You know, in my mind, all I was hearing indirectly was list, invest, in the sense that as an insurance company, we do have a lot of small-sized insurance companies that are really looking to grow, and I believe that these forums grant them the opportunity to list on any of these platforms that have been made available by the exchange. So depending on which of the requirements that you'll be able to meet, you can list on the GA, you can list on the GACS, or even list debt on the GIFM market. And we really appreciate the stock exchange for coming up with these opportunities. One thing that was critical for me is as an insurance company, and if you took a look at Joe's slides, a lot of these global countries are invested in bonds. And for me, I feel that it's probably because of, you know, some form of liquidity that they require and some form of guaranteed returns on the fixed income side. But taking a look at the situation in Ghana, it's not really the same. So we had Malaysia that was about 45%, and the rest were even about 50% in the bonds. Could it be that, and I don't know what you think about that now, but could it be that the traditional way of investing in our father's time was really land and gold, and we still have that part in our mindset, even as professionals, or we are still growing as an industry. When I look at Na's presentation, Abner's presentation, she talked about how the bonds market had even grown significantly and liquidity was improving. So would you say that there's, the insurance industry is yet to open up and allocate more in the bonds market, or they're just comfortable with the allocation that they have currently?
With that, I think the key word we should be looking at is that the industry is growing. And Abner mentioned that, yes, we've been doing more and more of these bonds in the market. And we have a chart that we have on the desk which shows the breakdown of investments for insurance companies. And we've realized that from 2017 till date, we've seen a massive change from the usual T-bills that these insurance companies invest in, and now they are going into more of bonds and equities. We've seen that for the past 2 years, they've been even going longer on bonds, doing more of 7 years and 10 years on that. And with that, I think it ties into Abner's presentation on patient capital, because we know that life insurance companies specifically have the capacity to go long on our markets. So with this, Abner, do you think that this is something that insurance companies should continue to adopt in terms of going long and being patient with their capital, doing more of bonds, equities, and even going further to do some corporate bond transactions and some private transactions?
I think now you've nailed it, spot on. Life insurance companies especially have patient capital. The premiums they are taking are long-term in nature. And so diversification, matching your maturity profile is important. So I think it's one of the things that one of the speakers called up, partnering with fund managers who can help you structure the right portfolio. And I'd love to see more investment officers, chief investment officers from the insurance companies on this call. This is the message to them, so that they can start these investments, start learning about what the opportunities are, so they can structure the right portfolios to take advantage of to meet the obligations that they have. That's not to say do not take advantage of short-term opportunities in the market, but for sure, the long-term end has been shown to provide over a long period the best returns. So I think that's one of the critical things to look at. Thank you.
Thank you very much for that. I think it's, as you said, very critical thing to look at. On our end, we also believe that it's key to look at all these terms that we've been talking about. I think here I can bring in Emmanuel Kujo, who is a senior vice president. He's a head of securities trading. He can share a bit more light on the market, and then what insurers can also look at when investing in the market. So Emmanuel, if you're around, kindly just come in, just briefly, a minute conversation just to enlighten our audience on some of the fixed income products and equities. Thank you. Emmanuel, are you on the call?
Hi,
yes.
Sorry, I was just trying to sort out my technology. So I think this session has been a very good one, and unfortunately I don't have my presentations ready. And as you rightly said, over the period we've seen the insurance companies moving from having a lot of allocations to the front end of the curve, which is predominantly the treasury bills, to the long end of the curve. And just a bit on, looking to buy the fixed income securities. On the secondary market, of course, you will need to go through a licensed dealing member of the exchange and also a member of the GFM to be able to buy that. And Black Star Brokerage, having been one of the leading brokerage firms on the market by the GFM rankings and by our activities on the market, you can always come to us. And what we are going to help you do, if you're interested in buying a lot of the fixed income securities listed, is once you contact us, you let us know what exactly you want to buy. And when I say what exactly means, how long you want to put your money away. And this will depend on the kind of insurance company you are. If you are a general insurance, more likely you want to have something as short as possible, usually between 1 year to 2 years. And if you are life insurance, which possibly you have a lot of your policies with durations going beyond 3 years, and even some are life, you can buy the very long end of the curve. So once you come to us, that I have, let's say, 1 million or 500,000 Ghana cedis, and I want a rate for, say, 1 year to maturity, we go on the market and we have vast client base, especially offshore investors who hold various portfolios in our bond market. We have access to fund managers who also participate on the market in various capacities. So we put all these client groups together, we pick your order, and we look at which of them is offering the best rates. So once we get the best rate, we communicate to you that this is the rate you're getting based on the duration specification you told us and based on the amount. And what we do in addition to that is we give you the cash flows on the bond specific paper that we've selected to meet your specification for you to take your time, do your analysis. And once you are happy with the analysis and the return you are looking to make on the particular bond we are showing to you, you can always revert back to us to go ahead and execute transaction. Now, the key thing about buying a bond is you will need to have a CSD account, which I want to believe a lot of the audience over here possibly have CSD account. If you don't have one, we can always create one for you. And the CSD account is the platform where all securities are held. So now we don't do certificates anymore. We are in the digital form. So you need a CSD account, and with the CSD account, you are free to buy any securities into that account. So we show you the securities as you ask, and you're happy and you want to purchase. Once you have the CSD account, we can always give you the final details. We close the transaction and we have it settled into your CSD account. Now, a golden rule on the market is we don't want to go on the market, book a transaction and fail to settle. And when I say settle, that's when the security moves to your CSD account and cash also leaves your account to whoever is selling. So before you confirm a transaction, you always have to make sure you have the cash available. The settlement window ranges from T0, which is today plus a 0 day, so which is today, and to T+3, so today plus 3 days. So you have this window to choose to make sure you have your cash available and to settle the transaction. Again, you cannot always buy a transaction when you don't have, or book a transaction when you don't have the cash available. It will distract the market. And Ms. Amwa is on the call. We come under their radar as being a brokerage firm that's, do the wrong things on the market, and we don't want to be in that picture. So you always have to make sure you have your cash available. Again, assuming you have securities on your books and you want to sell them off, you go through the same process. You show us exactly what you have. We go on the market, speak to the market participants, get you the best price, and send you the details for you to consider. Once you are okay with the price you're getting for you and the sale proceeds you're going to get from selling the security, you give us the go ahead, then we move on to sell the security from your CSD account. Again, the golden rule with selling is you always have to confirm you have the security in your CSD account before you give the go ahead. We don't want to distract the market again. So when we sell the transaction, or when we close a sell transaction, we cannot go back to reverse it, because what is likely to happen is you have the buyer, saw the transaction to another person too. So as soon as one person breaks the chain, then it becomes a distraction to the entire market. So always, when you want to sell, you always have to confirm that you have the securities available by asking for your CSD statement, usually from the institution that opened your CSD account for you. So this is the brief process as an insurance company. If you want to buy bonds from the secondary market, you usually go through. And I guess after the call, we'll leave our details around. If you want to have a lot more engagement on that, you can always call us, or if you want us to come to your office and engage you a lot more, we're always available to pop into your office and have conversation. So thank you very much for the few minutes allocated to.
Thanks a lot for that, Emmanuel. And I'm hoping that the professionals here will be able to reach out to you to get their trades executed. I think before we bring this to an end, there was one important point that Abna made. And it was interesting that she mentioned this because yesterday and the first day, we also had one of the speakers talking quite vividly about it, and that had to do with the fair value of bonds that are traded on the market. And we appreciate that the regulators are actually taking this up and doing what's necessary. We have a lot of situations where people assume that once they are invested in fixed income securities or bonds, it doesn't lose its value at any point in time. There are times where you've had market participants complain that the regulator should do something about it. And we really are happy to hear that the GSE, the SEC, has had this conversation ongoing. And at Blackstar, we are happy to partner with the GSE because we've also been doing some work around this where fund managers say they don't have the data and all of that. So we really appreciate that from the GSE, and we hope that these things will bring more transparency into our market, and at least will help our insurance companies also manage their investment positions quite well. So as we bring today's session to an end, we would like to thank all the speakers. We would like to thank you, the audience, for joining us. And at this time, we'll be taking it over to Nana to wrap it up for us. So from us, it's thank you, goodbye, and we'll catch you again. Over to you, Nana.
Thank you, Selon. And not to sound like a broken record, we appreciate all of you for being on today's session. Tomorrow we are focusing on the non-bank financial institutions, and we will have a great level of. Tomorrow we will have a great level of participation with high-profile speakers coming to give us a lot of insight. So day 2 down, and we invite you to day 3. So see you all tomorrow at 10. Thank you for now.